Hi, welcome to Let's Talk Bonds, the weekly podcast from Minor Bonds. I'm Arjun Patsati, and in this weekly podcast, I'm going to take you through the Bharat Bond ETF. The government has launched its new ETF maturing in 2033 and at a yield of 7.67%. The NFO is open now and is available for investors, and it closes on the 8th of December. This is to give you an information and give you knowledge on what all to look at to invest in this particular NFO, and also whenever you want to invest in any Bharat Bond ETF. So let me take it one by one. In this podcast, you'll learn about what is an ETF, and second is what is a bond ETF, and what are the factors that should go into investing in a bond ETF. And the third is what are the benefits, what are the pros and cons that you need to look at. The first is an ETF. What is an ETF? An ETF is an exchange traded fund. So for equity, those of you investing in equities will know that you have Nifty ETFs and Sensex ETFs and many indices ETFs. What these ETFs do is track a particular index, and it's a passive investment strategy. The ETF just tracks the invest. There is no active management of the funds. Only time it changes is when there is a rebalancing of the index, and when that happens, the ETF discards whatever is out of the index and puts in the new one. But the main thing is that the ETFs are very liquid, as in you can buy and sell like equities, and there's every day the prices are of the index are available, and investors just wanting to capture index returns can easily just invest in ETFs and not worry about any active fund management. And most importantly, ETFs have very low expenses. The expense ratios are almost nil. So Bharat Bond ETF is an index of PSU bonds, the high AAA rated PSU bonds. So basically, investors are getting the best credits in the country, because all these bonds that are AAA rated PSU bonds are completely government owned and backed by the fact that the government, they are very instrumental in the government's functioning. I mean, in terms of government's policy, regulation, etc. And in terms of infrastructure development, railways, and everything else, power. So the whole ETF is an index of bonds that are very strategic to the government, and since credit risk is just next to G-Secs and maybe SDLs, PSU bonds will be the in terms of safety will be the most safe, and so hence investors get a basket of AAA rate PSU bonds. So in terms of credit risk, Bharat Bond ETF is almost very low credit risk, almost very zero credit risk. But having said that, they are not immune to rise or fall in credit spreads. So that means that if the ETF, if a PSU bond is trading at a certain level to the government bond, say at a spread of 50 basis points, this spread can go up to 100 basis points, or go down to 25 basis points on various factors, and investors should be aware that. So if the spreads rise, so investors take a price risk as well. And also they are also susceptible to interest rate fluctuations. So when interest rates rise, Bharat Bond ETF prices fall, and investors who want to sell the bond can face capital loss. The ETF is very liquid. Investors will just have to go to the stock exchange, and like buying equity, they can buy the equity. They can buy the ETF. Like I said, expense ratios are very low and high transparency in the index consisting of the portfolio. So NSE maintains the benchmark indices, and the fund tries to track the index as close as possible. What should go into the investment rationale if you want to invest in this ETF? One is you have to look at the maturity. So if it's 10-year maturity ETF, that means, and if you want the return of 7.67%, which is the current yield, then you have to necessarily hold the bond for 10 years, hold the ETF for 10 years. That is when you'll get the returns as well as the capital gains tax benefits. Indexation is available after 3 years for the ETF. But having said that, to get the full benefit and the lock into the yield, investors will have to necessarily hold for 10 years or close to that. So it's unless they hold it till end of the maturity of the index, the returns are not. And like I mentioned earlier, the ETFs are have price risk. So if just to give you an example, just to look at the NAV of the 2032 index in the last 1 year, and you will find that the NAV has gone down sharply, largely because the interest rates have gone up very sharply. So, but there are different maturities of the index. You have a 2023 maturing ETF, you have a 25 maturing ETF, then you have a 28, you have 29, 30, 31, and 32, or 20, 29. Also, there's a lot of ETFs with different maturities. Now, which is good for investors because investors can then take a call on which maturity invest in. So these are the factors that need to go into the investing in the ETF, and investors can consult the financial advisors to take the best decision accordingly. What are the pros and cons? The pros are obviously low expense ratios, transparency, very low credit risk, high liquidity, and capital indexation benefits for capital gains. The negatives are clearly credit spread risk, price risk, and the fact that investors will have to hold the bond for a longer period of time if it's a long maturity bond to gain the full value of to lock into the yields offered by the ETF. So these are the pros and cons of investing in a Bharat Bond ETF. And you can always track the index ETF yield curve and the price NAVs on INR bonds. INR bonds is an electronic bond platform and is available for financial advisors to check the best bonds that are offered on the platform. We have over 330 live prices of bonds. So it gives you a full transparency of prices. And of that, you can also get a curated list of bonds, which is based on other factors, which INR Bonds Analytics uses to curate the bonds. All this comes with the ease of transactions, most information. Financial advisors can easily transact on behalf of their clients. Very seamless investment process with the full support from pre-transaction, transaction, and post-transaction support. Thank you very much for listening in, and do not forget to download our app, Quick Invest by INR Bonds, for the best curated list of bonds on offer with the easiest of in-app investment process. And do not forget to follow us on all podcast channels.